Tom had always wanted to be rich, but he never had the chance. He was a 58-year-old man who had worked hard all his life, but he had nothing to show for it. He had lost his job as a manager at a car dealership in Michigan in 2012, when the economy crashed and the company went under. He had no other skills or qualifications, and he could not find another job. He and his wife, Lisa, had to sell their house and live in a tiny apartment. They had some savings, but they were barely enough to cover their bills and their health insurance. They were scared and depressed about their situation. Tom had always been fascinated by the stock market, but he never had the opportunity to invest. He decided to use his severance pay of $10,000 to open an online brokerage account and start trading. He had done some research and read some books about investing, and he had a basic idea of how the market worked. He knew that he had to be patient, disciplined, and diversified. He also knew that he had to take some risks, as the potential rewards were higher. He started by investing in some well-known and stable stocks, such as Apple, Microsoft, and Walmart. He also bought some exchange-traded funds ETFs, such as SPDR, S&P 500, Vanguard Total Stock Market, and iShares Core US Aggregate Bond. He followed the news and the market trends, and he adjusted his portfolio accordingly. He also kept some cash for emergencies and unexpected expenses. In his first year of investing, Tom made a small profit of $1,000, or 10% of his initial capital. He was satisfied with his results, as he had beaten the market average of 7%. He reinvested his earnings and continued to learn and improve his skills. He also found some new opportunities, such as dividend stocks, growth stocks, and value stocks. He diversified his portfolio further and added some sectors that he thought had strong potential, such as technology, healthcare, and energy. In his second year of investing, Tom made a larger profit of $5,000, or 45% of his capital. He was excited with his results, as he had outperformed the market average of 13%. He reinvested his earnings and continued to discover new strategies and techniques. He also used some tools and resources, such as stock screeners, financial calculators, and newsletters. He subscribed to some trustworthy and reliable sources, such as Motley Fool, Morningstar, and Zacks. He learned from the experts and the analysts, and he applied their advice and recommendations to his own portfolio. In his third year of investing, Tom made a massive profit of $20,000, or 133% of his capital. He was ecstatic with his results, as he had crushed the market average of 11%. He reinvested his earnings and continued to refine his methods and approaches. He also tried some new areas, such as options, futures, and cryptocurrencies. He learned how to use leverage, hedging, and speculation to increase his returns and reduce his risks. He also learned how to use technical analysis, chart patterns, and indicators to identify trends and signals. He became more confident and proficient in his trading. By the end of his fourth year of investing, Tom had turned his initial $10,000 into $100,000, or a 900% increase. He was amazed by his results, as he had achieved a remarkable compound annual growth rate (CAGR) of 90%. He reinvested his earnings and continued to expand his knowledge and experience. He also decided to move to Florida with his wife, as they had always wanted to live in a warmer and sunnier place. They bought a brand new house in a nice neighborhood, and they enjoyed their new lifestyle. They also had enough money to pay for their health insurance and other expenses. Tom did not stop investing, as he had developed a passion and a hobby for it. He also wanted to secure his financial future and leave a legacy for his children and grandchildren. He continued to invest in the stock market, and he also invested in some other assets, such as real estate, gold, and art. He diversified his portfolio further and added some international exposure, such as emerging markets, Europe, and Asia. He also kept up with the latest developments and innovations, such as artificial intelligence, biotechnology, and renewable energy. In his 5th year of investing, Tom made a stunning profit of $200,000, or 200% of his capital. He was astonished by his results, as he had matched the market average of 200, which was the best year for the stock market since 1995. He reinvested his earnings and continued to optimize his portfolio. He also invested in some of the best performing stocks of the year, such as Tesla, Netflix, and Amazon. He also benefited from the recovery of the energy sector, as oil prices rebounded from their historic lows. In his 6th year of investing, Tom made a solid profit of $300,000, or 100% of his capital. He was pleased with his results, as he had surpassed the market average of 19%. He reinvested his earnings and continued to balance his portfolio. He also invested in some of the most promising stocks of the year, such as Shopify, Zoom, and Nvidia. He also profited from the growth of the healthcare sector, as the coronavirus pandemic spurred the demand for vaccines, treatments, and diagnostics. In his 7th year of investing, Tom made a decent profit of $400,000, or 67% of his capital. He was content with his results, as he had exceeded the market average of 10%. He reinvested his earnings and continued to diversify his portfolio. He also invested in some of the most innovative stocks of the year, such as Square, Spotify, and Roku. He gained from the expansion of the technology sector, as the digital transformation accelerated across various industries and sectors. In his 8th year of investing, Tom made a modest profit of $500,000, or 42% of his capital. He was okay with his results, as he had equaled the market average of 42%. He reinvested his earnings and continued to adjust his portfolio. He also invested in some of the most resilient stocks of the year, such as Costco, McDonald's, and Procter & Gamble. He also benefited from the stability of the consumer staples sector, as the recession and the uncertainty affected the spending habits of the consumers. In his 9th year of investing, Tom made a small profit of $600,000, or 25% of his capital. He was not happy with his results, as he had underperformed the market average of 35%. He reinvested his earnings and continued to review his portfolio. He also invested in some of the most undervalued stocks of the year, such as Ford, Coca-Cola, and IBM. He also hoped for the recovery of the cyclical sector, as the economy and the market were expected to rebound. In his 10th year of investing, Tom made a huge profit of $1 million, or 83% of his capital. He was ecstatic with his results, as he had outperformed the market average of 25%. He reinvested his earnings and continued to improve his portfolio. He also invested in some of the most explosive stocks of the year, such as Coinbase, Airbnb, and Snowflake. He also capitalized on the boom of the cryptocurrency sector, as the adoption and the acceptance of the digital assets increased among the investors and the institutions. By the end of his 10th year of investing, Tom had turned his initial $10,000 into $2 million, or a 19,900% increase. He was astonished by his results, as he had achieved an incredible CAGR of 63%. He had become a multimillionaire by investing in the stock market. He had also achieved his goal of moving to Florida and retiring happily. He and his wife traveled the world and visited many places and cultures. They also donated some of their money to various charities and causes. They were grateful and proud of their achievements and their journey. Tom's story is a rewrite of how investing can change one's life and fortune. It is also a rewrite of how perseverance, discipline, and learning can lead to success and happiness. Tom's story is not a guarantee or a promise, as investing involves risks and uncertainties. However, it is a possibility and the inspiration, as investing offers opportunities and rewards. Tom's story is a story of a man who became a multimillionaire by investing in the stock market and moved to Florida.